Hi and welcome to the channel. Today we will share ideas from Fake by Robert Kiyosaki. Robert Kiyosaki is best known for the book Rich Dad, Poor Dad, and his reputation as a real estate investor and business owner is second to none. In Fake, he highlights how the monetary system, the investing world, and the traditional education system can lead us to a lifetime of needing a paycheck. The book shares some thought-provoking ideas, so let's dive straight in. Disclaimer: this is not financial advice. The first part of the book discusses the concept of fake money. Essentially, Robert Kiyosaki warns that once the US dollar was taken off the gold standard, the government just kept printing money. In fact, this money printing activity is practiced worldwide. The illusion that money printing provides is that we are richer and can live a more affluent and comfortable life. However, the issue with money printing is that inflation follows. So even if we have more money per se, the purchasing power is actually less. Money printing is also called fancy things such as quantitative easing, which is what we hear quite frequently in the media. So with this in mind, Robert Kiyosaki advises against hoarding loads of cash in the bank. He strongly believes that savers are losers. He has a point, because if you see how low interest rates are, cash stacked away in financial institutions are not doing much, while inflation keeps going up. Robert Kiyosaki recommends buying what he calls God's money, actual physical gold and silver. He believes that these precious metals serve as a good insurance against the inevitable drop in the value of world currencies. Personally, I think there is some logic to this, and perhaps one might consider buying such commodities as part of their savings plans. The second part of the book is titled Fake Teacher. Well, basically, it highlights how the education system essentially keeps people in the workforce. This system encourages good grades, a degree, and getting a high-paying job. By following the norm, we essentially start to trade our time for money while paying taxes. Alternatively, Robert Kiyosaki advocates the need for what he terms real education, i.e., financial education. And this means learning about investment options and how to generate income while minimizing tax legally. To summarize, financial education comes down to how money flows. So let's refer to this image. Say we have a job and we are employed. The money we earn is taxed and the money goes to the government. Our retirement funds have fees which go to the fund managers or Wall Street or the stock market. And finally, our house that we live in is subjected to a mortgage which has interest repayments, so the bank earns from our home. So essentially, from a cash flow point of view, we are continuously losing money from different angles. By understanding this simple chart, I personally think some adjustments can be made to minimize the outflow of money. 1. Understanding what options there are in your country of residence when it comes to legally paying less tax. This could be having a small business which enjoys certain tax write-offs, or investment options such as real estate that has tax depreciation. As for retirement or mutual funds, look at how the fees eat away at your returns. Small fees can add up, so are there any better options available to you? And 3, it is important not to overstretch by buying a McMansion. Get what is affordable, and essentially work out your repayments or your ability to repay before you make a purchase. This way you don't overcommit and can take steps to pay down the mortgage as quickly as possible. Also, look at options of refinancing if a better deal and a lower interest rate is possible. Lastly, the notion of fake assets. Robert Kiyosaki classifies pension funds, IRAs, 401ks or superannuation in Australia as fake assets because there is continuous outflow of funds via fees. These occurs over years. In fact, the recent pullback in the stock market demonstrates the impact this has, whereby many fund holders, myself included, have lost a proportion of their capital. However, fund managers still get paid. In addition, Robert Kiyosaki also warns that stocks can be classified as fake assets because the stock market is essentially a giant casino, and big players move the market, and this is where mom and pop investors lose money. So I think the best takeaway from this section is a reminder to really study any investment options that you choose. In some countries such as Australia, we have no control over our retirement fund if you are employed, as the retirement fund is considered mandatory. Money is taken out automatically from your paycheck and invested in the fund. However, by understanding the investment options available, one could then position themselves to allocate their capital based on their risk tolerance and market movements, thus making a somewhat educated decision. In addition, I truly believe that the risk is not in the investment, but rather in the investor. So while some may be very successful in investing, diving into these investments without proper education is very risky. Watching a few YouTube videos or reading blogs is not proper education. Rather, it is important to immerse yourself in courses that will help you do proper evaluations and assessment of your choices. Finally, I think the book provides some great insights into how the financial system works and how we can better position ourselves for possible problems in the future. The book, however, can be a bit repetitive, so if you do consider reading it, you might find yourself skipping a few sections along the way. Nonetheless, I hope you enjoyed this video. As always, please subscribe to the channel to help it grow and leave me a comment below. I look forward to our next meeting.